Hello, this is Paula Tavenger and I'm here with the weekly blockchain brief. Today's news section will be mostly focused on the collateral damage of the FTX's bankruptcy and what some companies are taking in terms of action to strengthen the industry and how other companies are reacting and did they hide any potential exposure to FTX previously. So let's go right into it. We start with some efforts from Binance, which promised to deploy $1 billion to the whole industry afloat. Binance announced on Thursday new details about their industry recovery fund, which will be aiming to support struggling players in the wake of the FTX's bankruptcy. Binance said that it will devote $1 billion in initial commitments and that it might increase it to $2 billion if there is such need in the market. The recovery fund also received $50 million in commitments from crypto-native investment firms such as Jump Crypto, Polygon Ventures, and Animoca Brands. Binance said that the vehicle is not an investment fund and it's more intended to support companies and projects that are facing short-term financial difficulties which are not due to their own fault. The fund is intended to prevent the cascade events after the series of bankruptcies. If we need to draw a parallel with the 2008 financial crisis where we had the governments bailing out struggling companies, we have here the industry giant Binance stepping in. The program is anticipated to last around 6 months and it already received almost 150 applications from companies requiring the help. Next, we're moving to Genesis or their parent company DCG. Can they be the next victim of the crypto winter? DCG announced last week that the Genesis Global Capital lending business had made, I quote, the difficult decision to temporarily suspend redemptions and new loan originations. There is apparently an issue of liquidity and duration mismatch in the Genesis loans book. That's what is at least shown from the statement. However, also the statement revealed that Genesis spot derivatives trading and also custody will continue to operate as usual until now. What is worrying in the situation, in my opinion, is that Genesis had reportedly been seeking at least $1 billion in new capital, reducing later on that to $500 million, but still they don't have any commitments from investors for that. On Monday, Genesis also issued a statement that it had no plans to file bankruptcy imminently. However, the very next day, the news broke that Genesis had hired already restructuring advisors, Moelis and company, to examine all possible scenarios, which also include bankruptcy. Genesis recently admitted also to having around $175 million locked on the collapsed FTX exchange, after previously declaring that they had no material net credit exposure to the entity. That was followed by an admission that it also had suffered a total loss of almost $7 million across all parties, including Alameda Research. Bloomberg recently estimated that Genesis had $2.8 billion in outstanding loans, and something that requires a highlight here is that nearly 1/3 of those loans were owned by related parties, including DCG and Genesis Global Trading. Just a reminder in terms of the context, Genesis is a subsidiary of DCG. In a letter to the shareholders, DCG revealed borrowing $575 million from Genesis to fund some investment opportunities and to also repurchase its own DCG stock from non-employee shareholders. This week was full of news about DCG and Genesis, so maybe it's worth commenting separately on Digital Currency Group, which made the headlines with its $2 billion debt revealed in the same letter to investors. DCG's debt amount to just over $2 billion. The company borrowed, as I mentioned already, the $575 million from Genesis, and the loans were claimed to be priced at prevailing market interest rates, and they are due in May 2023. However, DCG also absorbed the $1.1 billion that the bankrupt crypto hedge fund Three Arrows Capital owed Genesis, so that's a big part of that amount. With Three Arrows in bankruptcy, DCG is pursuing all available remedies to recover the assets for the benefit of creditors. And DCG's only other debt is $350 million credit facility from a small group of lenders led by Elbridge. Another potential trigger for bigger trouble, in my opinion, is the Grayscale Bitcoin Trust, for which the asset managers refuse to provide proof of reserves, which is making the community question the integrity already. And the fund has been trading at a discount to BTC for a long time, but now the gap increased to almost 45%. Some independent analysts started digging the on-chain holdings to try and verify the actual amount of BTC backing it on Twitter. And what they found is a major discrepancy in the inflows of around 6,250 BTC. We continue to follow that topic, and any updates you can also see here the link to the Twitter post. And let's move to the macro section. Just a month back, the recession was more of a question. Today, all major economists predict such a recession anywhere from Q1 to September 2023, and they only differ in the severity predictions of the recession. Also, Federal Reserve staff economists briefed policymakers this month that the chances of a US recession in the next year had risen to almost 50% on risks of slower consumer spending, global economic risks, and also further interest rate hikes. The forecast was detailed over the minutes of the November 1st FOMC meeting, and it was the first such warning since the central bank began raising the interest rates back in March. Sluggish growth in real private domestic spending, and deteriorating global outlook, and tightening financial conditions were all seen as downside risks to projection of real activity. The possibility that a persistent reduction in inflation could require a greater than assumed amount of hiking in the financial conditions was seen as another downside risk. The staff there more continued to judge that the risks to the baseline projections for real activity were skewed to the downside, and viewed the possibility that the economy would enter a recession sometime over the next 1 year. By comparison, economists surveyed by Bloomberg this month saw a 65% chance of a recession next year, and a Bloomberg economist model put the probability at 100%. Maybe the main takeaway for us here is, would that be a potential positive event for the blockchain sector? We have been highly correlated to all the macro factors for the almost past 1 year. And looking ahead, would investors seek more alternative investments? Are they going to come back to crypto? Or would all the negative events happening on a daily basis in the industry cause a final loss of trust? We're going to only observe and see this in the coming months. And while comments and trust from the blockchain industry leaders that the market will pick up sometime in Q1 next year due to launch of multiple new funds, new projects, and simply even psychologically is a new financial year, then what we're seeing actually in terms of macro is that we're expecting a worsening economic situation. So again, as I said, like here, we're mostly looking at, are we going to experience any sort of divergence, or we're going to continue being highly correlated with the global macroeconomic situation? Let's move to the VC section and see what interesting deals got closed during the last week. We start with an announcement from Node Labs, the team behind React, which announced that it secured $4.2 million in funding to develop the world's first community-owned, decentralized Web3 platform that offers small businesses and individuals cash and also tokenized incentives for connecting their energy storage assets to the platform. React's network will allow participants to connect their home batteries to companies' Web3 network in order to be rewarded for the relative contribution of their specific assets. Few prominent VCs participated in the round, such as the Binance Fund, CoinShares, and also we see here the Digital Currency Group, which despite all the rumors continues actively investing. Second one I picked up for today is BuildSpace, which is a network of Web3 builders. They recently announced that they raised $10 million in funding round led by A16Z with participation from founders Inc., Y Combinator Protocol Labs, Solana Ventures, and OpenSea Ventures. BuildSpace aims to provide an education platform for users to explore their career path. Currently, the projects on BuildSpace include Solidity, Ethereum, NFT, Solana Web3 apps, and some others. Second one I picked up for today is BuildSpace, which is a network of Web3 builders. They recently announced that they raised $10 million in funding round led by A16Z with participation from founders Inc., Y Combinator Protocol Labs, Solana Ventures, and OpenSea Ventures. BuildSpace aims to provide an education platform for users to explore their career path. Currently, the projects on BuildSpace include Solidity, Ethereum, NFT, Solana Web3 apps, and some others. Let us know what do you think about the whole situation with Genesis and DCG. If you find anything interesting on Twitter, please link it down in the comments. We'll be interested to discuss. And as usual, thank you so much for watching and wishing you a great week ahead.